Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 18th of January. Starting off with Angus Energy, which seems to have rebuffed Sound Energy, which obviously wasn't very friendly, but the shares have still pushed higher with a gap high yesterday to start the week, which is good through resistance at 1.15 pence. Implication of that gap is that we've got plenty more upside to go, bid or no bid. The target here on a technical basis up to 2 pence, which is a line of resistance from this time last year. Also got the 50 and 200-day moving averages both rising, so that implies that we're in the run-up to a golden cross, and the run-up to such a signal is traditionally the strongest part of the cycle. So basically above a penny, looking for 2 pence at Angus. On to Cyba, which I covered on the 11th, apparently. It was a bit of a I suppose, a sort of out there type of call, but was assuming that we'd break that falling wedge that shares have been in since May, and the 50-day moving average at 1.75 pence. At that time, the target was up to 2.75 pence, which has been hit today. The view now is that if we get an end-of-day close through to 2.75, we could see a fresh move to the upside as high as 3.6 pence, which is an April resistance line projection, but clearly in the near term the job has been done here. Ideally there's no breakback below 2.1 pence in the 200-day moving average ahead of any fresh moves to the upside. On to Itaconics, which is sporting one of our favorite little formations, which is what I call a V-shaped bull flag. So we had the break of the trend line there from June. That was around 5 pence. Came back to test the 50-day moving average as support at 5.5 and bounced there, so that's the V. End of day close above the late December resistance of 6.71 should be enough to give us at least a test of the gap area from back in September around 8.5 pence as soon as the end of next month. But I like that sort of sideways shuffle the shares have delivered. That should be a decent platform for further share price growth. We also can see that December was effectively a 3-week bear trap for the shares below the 5.5 pence level, previous support. On to Petro Matad, and here we've got a decent situation as well. That extended base after the massive gap to the downside in July, neckline resistance at 3.4 pence above that. We're looking and hoping to see the shares up at 5.3 pence, which is the top of the July gap. Time frame on that as soon as the end of next month. Onto a stock which I've decided is one of my favorites on a fundamental perspective. Don't ask me exactly what that is, but at least that seems to be well settled, and the share price also well settled. Previous target was 20 pence, and above 20 pence we're looking for 35 for Pipehawk, and also looking for this little bull flag we have here to resolve towards that 35 pence area as soon as the end of next month. All the near-term averages, or the near-term averages, rising after that golden cross that we had back in September. Onto a stock which I'm very pleased to see has revived itself. There was an interview with myself and Ed, I think last month sometime, when the stock was around 5 to 6p. Shares have done well since then. Another V-shaped bull flag situation, so we're coming back to test 50-day line at 6.5 and then pushing up higher now. The view is the initial target here is 9.5 pence, which is that April resistance line, and maybe over the next 1 to 2 months as high as 12 pence at a March resistance line at the top of a broadening triangle from last year. Good to see some of the smaller and less popular oilers do well at the moment. Serena is one of those, and we broke that line of resistance from back in February at the 50-day line at 1.7 pence. Above that, we had an initial target at the 200-day moving average of 2.25, and then we've got 2.87 or 2.9 pence, I suppose, the top of an August triangle for maybe by the end of next month. The revival backed by a bullish divergence line in the RSI window, that uptrend line there should power the stock yet further over forthcoming days and weeks. Bit thin on the ground today in terms of potential heroes, but technology minerals doing very well at the moment. The reason for a repeat inclusion today is that we've had Now, what's that? 4 very solid candles in a row. We've hit the top of that rising trend channel from back in November at 5.3 pence, let's call it. We're breaking that at the moment, and the next level up could be as high as 8 pence by the end of next month, which is a November resistance line projection. At this stage, only back below the initial December, or January rather, resistance of 4.3 pence, really delaying the upside scenario. Finishing off with Victoria, here you can see that shares have given us a decent kind of W-shaped reversal. The neckline there around 4.3 pence, while we're above the 200-day moving average of 4.1 pence. Looking for higher prices, obviously to retest April resistance as high as 6.5 pence over the next month or so. And once again, we've got one of those V-shaped bull flags, so that is a pretty healthy situation. Plus, we also have the bonus of both the 50 and 200-day moving averages rising. This could mean that we're in the run-up to a golden cross, and of course, that tends to be a strong period for a stock or market. Looking at the bigger picture, probably the best case scenario at this stage, if I can get the trend line going there, is that we see a rising trend channel towards the 10 pence area, which would be from a line of resistance from back in December last year, heading towards that area, and the rising trend channel floor as I am drawing it now. So basically around the 50-day moving average area, so above 3.5. Looking for 10 over the next 2 to 3 months, and especially if we can hold the 4 pence in the interim. That's it from me today. More updates tomorrow.